Hi, I'm Ralph Ibendahl. I run the energy transition business for Europe. I'm here with Ross Board, who's a director in the energy transition team, and Paul Betts, who's a managing director in our M&A team. So when you look at the investor proposition and people that are actually investing in this space, the capital need across the entire value chain is very significant. Ross, who do you see actually investing in the storage space?
Yeah, it's a really interesting question, Ralph, in that 24 months ago, maybe the answer would have been very different. Storage was viewed as a more nascent, high-risk technology, but that's really changing, and we're getting phone calls nearly every week from a mix of institutional investors, both international and domestic, but also infra funds, private equity players, and there's various different angles being looked at here. So you've got the likes of GLIL and Brookfield, who have bought up pipelines and partnered with various operators. But also we recently advised RWE on their entry into the UK market, acquiring JBM Solar, which is a business with over 6 gigawatts of storage and solar capacity in the UK. So really it's a mix of strategics, financials, right through the risk spectrum, and people are viewing storage assets in very different ways. So low risk revenue structures with floors and access to debt capital markets are attracting more infra-like investors, whereas others that are taking more sophisticated views on market risk, such as commodities houses like Vitol, have also entered the marketplace with very different approaches. So it will be very interesting in the coming years to see how that starts to converge, but ultimately there's a very broad set of options available to investors in the battery space and a clear need for capital commitment. I think with that, Paul, I'd be interested to hear your views on access to financing and how those risks come about. But to me, I think that's one of the key considerations here, in that the revenue structures really do enable financing, which is something that has to come a long way, I think, to develop to the targets we have.
No, it's a very good point. I think on the project financing side of things, which is the typical type of debt financing you would see for projects of this nature, the issue that the lenders are facing is that without a firm binding contract and a pathway to revenue, it's very difficult for them to lend against that because they can't see what sort of security they can get. So a lot of work still needs to be done to get lenders familiar with this space, but effectively companies will need to deter or defer raising project finance until such time as they have a binding contract in place. And we saw that on Northvolt. It was only when they got binding contracts from VW and BMW that they were then able to go and tap the debt markets and raise $1.6 billion of project financing. But I think as an institution, RBC is very committed to supporting these companies that are focusing on decarbonisation. And so we're trying to work out how we redeploy our balance sheet to support those companies. To do so, we'll need to be offering project financing facilities, but also debt advisory capabilities to assist these companies in terms of how they think about raising capital on a holistic basis. So not just equity, not just debt. I think the terms of both of those instruments need to complement each other, and that's something that we're all focusing on and trying to come up with a suitable solution for the sector.
Paul, it's interesting when you talk about the capital requirement. A, it's of course very large, and then two, it needs to come from both equity and the debt side. The interesting thing on the EV charging side is there's no offtake. It's all about EV penetration. So you have to take a view as to how many EVs are going to be on the road. And of course, there's legislation supporting that and fostering the requirement to move away from internal combustion engines. Debt is starting to move into the sector. To date, it's basically all of the EV charging side has been equity funded. But as people get more comfort around EV charging, around EV penetration, we're starting to see debt instruments and companies raising debt to support that CapEx plan. The other area that I think is quite interesting is just to talk about the volume of capital needed for across the value chain. So on the EV side, we're talking about 150 billion to be deployed by 2025. That's basically a threefold increase versus 2021 numbers. So 3 times the money that needs to be deployed over the next 4 years relative to where we've been shows just a massive increase in EV penetration, and with that, the requirement to build out the infrastructure to support that. Numbers are very large. I don't know how it compares in the battery storage space, Ross.
In 2022, battery storage investments were expected to be around 16 billion. In 2023, that number is likely to double, as installed capacity does also, and increase exponentially thereafter. There are very ambitious policy and government targets across the world to install storage over the coming years.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.